So happy Friday, everyone. Welcome to the Paul Levine Show. And I'm here with Paul Levine himself and Betty Withrow. And today we're going to talk about, well, Paul's mostly going to talk about what real estate investors need to know, which is pretty much everything. So Paul, why don't you run with that?
Good morning. Happy Friday. Um, the real estate investor can go so many different ways when he or she starts investing in real estate. You can go very, very simple and invest in a limited partnership or a subchapter S corporation and make no decisions and just sit there and wait for those distributions that they promised you every month. Or you can get more involved. Like I was as a CPA for so many years, I worked with the owners of the businesses who were my clients. And they wanted to be the ones to make those final decisions all the time and have everything rest on their shoulders. And that's not a passive way to invest. That is as active as you're going to get. There's a lot of people, or there are a lot of people running around with different titles. In fact, it was funny. I say that I write, and I am now a published author of the Bible of Real Estate. And I was going through LinkedIn today, and I saw someone said he was the doctor of real estate. And when I saw that, I said, well, I'm the income tax man of real estate. And I've got more background than anyone else when it comes to taxes, anyone else doing what I do. Having been a CPA for over 50 years, I have more income tax education, knowledge, experience, creativity, and expertise than anyone else doing what I do. So, and I don't do something that others do just to impress you. There are people out there who will set up these wonderful, complicated trusts and different documents in different organizations in order to invest in real estate. And there's one person that I call in every time I have a client who is my age or near my age. And the guy happens to be the best estate and trust attorney that I know. And I've been in Los Angeles since 1969. So I've met a lot of people. But this guy's name is Bob Demeter. And Bob just makes the clients so comfortable and gets them exactly what they need. So I'm not the one that deals with those trusts and all sorts of wonderful things. I will make the transaction happen. And I will make it happen where, as I've written before, where you win, where you get what you want, where you get what you bargained for, and that you get what is a good leaping point to the next thing that you're going to want. But the thing that I wanted to talk about today is that there are professionals, and I put those in huge quotes. There are professionals out there who claim to be experts in real estate, experts in leasing out real estate, experts in God knows how much. And there's something that I saw recently that I have been dealing with. My partner, Fred Sams, and I are looking to spread our wings and let more people know about us. So I've been looking on my emails for houses that are for rent, because that's, to me, commercial real estate. Anything that you get income from that you own is commercial real estate. So even though it's a single family residence. So I've got so many emails that I've accumulated. And the thing that bothers me is I've been calling these agents, the people that represent the owners. I've been calling the agents weekly for a good number of weeks. And for the most part, when I ask them if they know what a cost segregation study is, they go, "A what?" They have no clue. And I've also encountered those people who say, "Yeah, I know something about it, but we don't use it." Why not? It's going to benefit your client. And so they don't want to deal in anything that they are uncomfortable with. Also, they don't want it exposed that they don't know something. So the person that owns that house that gets at least $5,000 a month in rent, because if you don't get at least $5,000 a month in rent, it isn't worth doing a cost segregation study. You have to have around $60,000 a year in rent to make this thing worthwhile. So the client or the person, the owner that has at least $60,000 a year from renting out a single family residence should take a cost segregation study, should have a cost segregation study performed. Excuse me. And the reason for that is that you can end up getting what I call an interest-free loan from the Internal Revenue Service. I have a question for you. When was the last time the Internal Revenue Service did anything good for you? The answer is never, except when you do a cost segregation study and you take a huge deduction for depreciation today. And yes, you have to give it back in some form down the road, but you're not paying interest on it. And you know what else? You're not even making payments on it. So where you would go to the bank and pay interest, you would have to make monthly payments. But on this type of a situation where the government basically gives you money and then takes it back down at the other end of the transaction, you're not making monthly payments at all. And think of how much that will benefit your cash flow over time. So you take advantage of this, the cost segregation study. But I want to get back to people knowing about when to do a cost segregation study. So some of these houses are renting out for $16,000 to $25,000 a month. These houses aren't little shacks. These houses are elaborate and beautiful and have all sorts of wonderful things. Now, you may think that you can't depreciate something that's attached to the wall, even like crown molding. But you know what? You can. And you can depreciate a whole lot of things that I'll bet dollars to donuts that you have no idea that you can. And I got to tell you, when I started this, I had no idea of what you can do. But they do. Remember, a cost segregation study is performed by engineers, not CPAs, not attorneys, not realtors, not brokers, engineers. So they know what it takes to have a piece of crown molding up. As a matter of fact, in certain instances, you can even depreciate or take bonus depreciation. I'll get onto that in a moment. You can even take depreciation on the shrubs and on the parking lot if you put blacktop over it and other different types of sealants and also those things that you put, the blocks that you put to stop the cars from going too far. I mean, all of these things you can depreciate when you start adding those things, plus the upgraded bathrooms, the upgraded kitchen, however many bathrooms, because some of these houses you got one per person. I mean, these numbers can get huge. And just think that if you're renting out a property for $25,000 a month, that's $300,000 a year. And if you're not looking for deductions, you're out of your mind. Thank you for that. I mean, I'm serious, because if you go into this to make money and don't consider saving money, then you're wrong. Then you've got to sit down with someone like me, maybe your CPA, maybe a financial planner, someone to learn the birds and the bees about investing in real estate. And the whole purpose of this is to make money, create wealth, save on income taxes, and I can go on. And I mean, you also, there is a way, and I've discussed it before, where you can save all of the money on taxes and pay no taxes, especially with commercial real estate. There is a way, if you have family, generational family, that you have grandfather, father, son, that the first person to own the property is the grandfather. And the grandfather owns the property and then takes depreciation, maybe bonus depreciation, maybe accelerated depreciation, but takes depreciation and ends up selling the property for two things. Number one, you bought it for $500,000, you sold it for $750,000, you have a $250,000 gain above your cost basis. But when you had that property, you depreciated that cost basis. So that cost basis, instead of being $500,000, was now $400,000. So you have $100,000 of what's known as depreciation recapture. So you pick up that $100,000 at 35% interest, and then you pick up the remainder at 20% interest, because that's capital gain. So you're paying tax. But if that member of the family, the grandfather, is the first to go and pass away, which is the way things should be, he can pass that property on to his heirs being the son. And that son gets that asset at fair market value. So if you bought it for $500,000 and you held on to it for some time, when you pass away, if that property is valued at $1.1 million, you are not only saving the capital gain tax between 500 and 1.1 million, or 600,000, you don't have to pay recapture tax. You don't have to pay any tax. Yeah, I know you're sitting there and going, wow. Well, everybody knows this. And I'm no genius to know this. It's instilled in us when you take your first or second or third income tax class in college. But the thing is, nobody plans for this. Nobody says, let's get the grandfather, the father, and the son in here. Let's see what assets the son is going to want that the father is going to want, so that the grandfather can purchase those assets now and can then leave them to his son, who we call the father now. And that father is now going to be the grandfather when the grandfather passes away, and you start the whole process over again. So it's there. I called my attorney up one day and I said, I have an idea that I want to bring out to the public. And he said, what is it? I have a really great relationship with my attorney. And I started laying this all out for him. and he finished the sentence. He knew it. And he doesn't only do real estate, he does other things, but I mean, a lot of people know it. I was on the golf course once in Santa Barbara, California, and you don't want to be anywhere else on a golf course other than Santa Barbara. It's beautiful. And we started a round of golf. It was me, one of my dear friends, and it's funny, he passed away a while ago, and I have his picture up on my computer watching me do this. But I went with him and two of his associates, and we played golf. And one of the fellows, nice guy, said that he's upset because his father is very sick, and they're going to have to sell the father's house in order to pay medical bills. And I said, how sick is he? And he said, he's going to go in a short time. And I took more information in from him. And by the time we got to the fourth or fifth hole, I had a pretty good idea of where I was going to take this. And when we got to the break, the ninth hole, I said, I have an idea. And the idea was refinance the house, take the money out, tax-free money, take that money out of the house, and then pay the medical bills, which you may get a nice tax deduction for. And then when your father passes away, he leaves you the house at fair market value, and no one pays a dime in income taxes. By the way, my number is right down there. It's 818-298-4000, because this stuff is basic, but like I said, nobody plans for it. And if you plan for it, you take advantage of a system that's absolutely wonderful to you. And it's the only thing that works like this. Now, let's get back to what you should know about real estate if you're going to be an investor. Because I'm throwing stuff at you from left and right, and you've got to know some of this stuff. Not all. The most important thing you have to know is, what questions do you ask? So when you're sitting around and doing nothing, you should be reading a book, maybe my book on investing in real estate. And my book is called The Bible of Real Estate. But you should definitely, it doesn't have to be my book, but you should definitely read up on things so you know what questions to ask. And I can't emphasize that too much. If you don't ask the question, and if your advisor, whether it be a CPA, a realtor, or a broker, doesn't volunteer that information, you're going to be lost, and you're going to leave money on the table, and you can even get hurt in the end. And you don't want that. And God, if you're my client, I don't want that for you. So I encourage my clients to ask questions. I was a university professor for 6.5 years here in Los Angeles at a school called California State University, Los Angeles. And I made my class think. I made them want to know why we're doing things. When I was a student, I went to one of the best schools in the country for accounting. And by the way, it cost me all of $23 for my first semester. Cost me $46 for the last semester. So when your tuition is doubling in 4 years, that's not good. But with these numbers, it worked out very nicely. So I would stay after class, and I didn't want to know how, and I didn't want to know what. I wanted to know why. And once I knew why, it was in here and it wasn't going anywhere. And God, that's when I was 22 years old, and I'm 77. So it's a long time, but it's never left. And that's the way I learned. And as a teacher, I made sure that I taught my classes why. And I just cannot overemphasize how much you have to know in order to be able to ask the right questions. It's imperative that you take over as the one who is the last man standing when everything else fails, that you're the one that has to make the decision. The buck stops here. Hi, guys.
Yeah, that was great, Paul. So I think the main lesson is that there's a lot of moving parts to becoming a successful
So
real
many.
estate investor,
Mhm.
and you need to know. For many people, they don't know what they don't know, so they have to know what they're missing. Cost segregation, those other kinds of things, and there's a number of ways where they can find that out. One, yes, is if you know you have to look up things, you can find it. But I think the book that you just launched is a pretty good place to start.
Yeah, I talk about so many different things in that book,
Yeah,
and it is the Bible of real estate. But it doesn't have all of those esoteric trusts and all of
yeah,
that
yeah,
garbage. I mean, I talked to someone a while back, and he told me that he has this trust and this charitable thing and that. And I said, "How much did it cost you?" And he said, $250,000.
yeah,
You know how much tax you're going to have to save to cover? Because
yeah, yeah,
remember, it's the amount of the deduction times your tax rate. Do you know how much in deductions you need to cover $250,000 in
yeah,
fees? That's absurd.
yeah, for sure. So, so there's a lot in the book now, and then we're already starting on another in the series.
Oh, are you really?
Yeah, you're the last to know. You're writing it.
No, I wrote it. I've been writing articles on Facebook and on LinkedIn for close to 5 years now. And I've got lots of people following me.
Yeah,
So if you want to know on a daily basis what you should know in investing in real estate, in asking the right questions, in dealing with the economy and the interest rates, in dealing with a law that may be a bipartisan law in Congress right now to bring back bonus depreciation at 100%. And if you didn't understand that, my telephone number is
yeah,
on.
the telephone number's there. Yeah, absolutely.
I mean, you've got to ask these questions. You've got to know these things if you are going to invest in real estate. And you can see, I don't just sit there, well, you have, I mean it. And this is the way I taught when I taught in school. This stuff means something to me, and my client means something to me. I am not wealthy. I will tell you a quick story. I saved the client over a $500,000 once, and I did it with 2 phone calls. And it was a client, and we were like this. And that's the way I am with just about all of my clients. And we sold his company to this small Delaware company called EI DuPont, one of the largest corporations in the world. And after I sold, and I was the negotiator. And after we sold the company, I got a phone call several weeks later from head corporate counsel from DuPont. This is 1984. I was born in 1946. So I wasn't that old yet. So I get a phone call from head corporate counsel from DuPont telling me that the wife purchased stock during a certain time in the transaction, and she has to pick up, or they have to pick up, something called phantom income. And they had to pick up $500,000 in phantom income, and they were going to pay $250,000 in tax. So I said to the guy, let me call you back. And I got off the phone with him and I called my client and I explained the situation. And as it turns out, the guy was 100% right. But my last words to my client were, can I play? He said, yes. I told you, we were like this. So I get back on the phone and I call this fellow back. And he goes, you got to pick up the income. And I said, I'm not, knowing full well I'm not signing an income tax return that's $250,000 short in income tax. No way do I do that. So, but he didn't know that. He doesn't know me. So I said, I'm not. And he goes, you have to. I said, I'm not. I said, you have to. And I said, do you know what it sounds like when a phone hangs up? And I had one of those wonderful phones that you used to actually hang up. And I hung up on the guy. And he called me back about 4 weeks later, and we have the same discussion. And he goes, you have to pick up the income. Excuse me. And I said, I'm not. And again, he says, you have to. And I said, remember how we ended the last conversation? And I hung up on him again. About 3 or 4 weeks later, if any of you know anything about Los Angeles, my office was in an area called Century City, and I lived in Marina del Rey down by the ocean. And halfway between was my favorite watering hole. It was called Bergen's on Fairfax. So I stopped there, had a few drinks, and had a very nice dinner, and made it home at midnight with a bit of a buzz on. To a message from my client to call him in Wilmington, Delaware, no matter what time it was. I said I got home at midnight. It was after 3 a.m. in Wilmington. So I picked up the phone and I called, and he picks up the phone, and I said, I woke you. And he goes, no shit. Sorry about that. Give me a minute. And he gets off the phone and he comes back on a few seconds later, and he goes, they don't like you here. I said, it's not a popularity contest. They ended up writing him a check for $567,000 and some dollars, which after income tax came out to exactly $250,000, and they paid the tax. The tax wasn't theirs to pay. It had nothing to do with them. But I knew that DuPont didn't want to be part of any transaction where everything wasn't done correctly. They paid the $250,000 by giving my client $500,000. When my client got back into town, we had dinner together and he paid. I could have charged him $10,000, $15,000, $20,000, $30,000, $40,000 for that. I saved him $250,000 out of his pocket. He paid for dinner. Going back to that golf game, the fellow who I gave the advice to paid for lunch. Excuse me. That's what happens when you're 77. Your throat dries out for after a while. But the point being that I care about my clients, that I don't look for how much can I bill them, how much can I make from them. You can bet that I look for some of it now because I'm 77 and I'd like to have a little bit put away for my retirement. But I love what I do and I care about my clients. And we, the client and I, do a lot. I used to get in trouble as a CPA because I would say to IRS agents, we didn't do that. And the IRS agent would look at me and go, you want a piece of the business? I go, no. It's just that when I work with my client, it's we. And that's an important thing because then you're taking responsibility. Guys, you want to give me a break?
Sure, yeah.
Yeah, I actually have to jump off the broadcast, but I will tell you from what I know of Paul, having worked with Paul, he's absolutely 100% real, and he's got that heart that he was just showing you. And so if you want like a real guy who really knows what he's doing, this is the guy. Okay.
Thank you.
That's probably a good place to end it. So we've got your contact information, your phone number, and they can go to the bibleofrealestate.info where the book, there's a link to buy the book on Amazon and a few other goodies there on the page, and come back next week. We normally do this on
Are we
Thursday.
selling M&Ms with the book?
All except for the red ones.
I mean, if you're reading a book, you should have a little nosh.
Yeah, well, okay. We'll talk about that later as shock and awe box, where you get the book and the M&Ms and
Yeah,
and
yeah,
something
yeah.
else. Yeah. We'll
Exactly. And
work
the T-shirt. Yeah.
on the
Mhm.
T-shirt. We'll work on
Yeah.
that. We'll get
Yeah.
maybe
Okay,
that'll
guys.
be available next week. We'll have it
All right.
available there. Yeah.
I'll see you around, people.
Okay.
Be good.
So
And
happy
it's been a
Friday,
pleasure.
everyone.
Bye.
Bye.